Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 3rd at about 1:15 p.m. Eastern. Well, the major indices are all lower, weighed down by broad-based selling interest that has pushed each of the major indices back into negative territory for the week. We can see some weakness in Apple after Morgan Stanley cited a risk of a shortfall to the firm's revenue growth forecast due to slowing App Store growth. Also this morning, the Labor Department reported a reasonably good employment report for May that stoked concerns about the Fed staying on an aggressive-minded rate hike path. And now let's move on to three charts that can give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Now, when I captured this chart today, the SPY was trading at $402.60, or about 41.26 on the S&P 500 itself. As you can see, it's trading above the 20-day, the red line, the 20-day moving average, below the 50-day moving average, and below the 200-day moving average. Now, we know that since the SPY rolled over from its January all-time closing high at $477.71, we know that it's come down here, certainly fell to January lows right around 427, tried to come back up, couldn't get over the 50-day, fell down to the gap down on the February low at 410, gapped up, started back up, retested those lows, and then it looked like, wow, maybe that was the bottom, back up here to 462, and then no, that wasn't the bottom after all, and then started down definitely in April, making lower highs and lower lows, and the bulls and bears duking it out, as you can see by the wide range days that ensued after that. So this SPY came down recently in the middle of May, down to the lows on May 20th of 380.54. So what we see now, we can see all the times we thought it was the low, and it wasn't the low, and it wasn't the low, and it wasn't the lows. Now we have another pattern here that looks slightly promising. I'm not going to bet my duck slippers on it, but I'm certainly going to keep an eye on it. And again, today we moved down to these lows, call this consolidation here 385, and we're back up to 412. So it will remain to be seen. It's a small double bottom pattern, it is a nice pattern. Do I trust it right now? Not particularly. So keep an eye on this week's low, which is 385. If the SPY has to roll over, fall below the 20-day and back below 385, we'll probably see another leg lower. If, though, it can move up and move over the 50-day moving average and close over that for a few days, it may look a little more promising. Either way, in the coming week, in getting into any positions at all, I am going to use protective stops because I believe we may have more volatility to go in this market. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ, and of course this is the ETF that closely follows our NASDAQ 100 index, a major index in the market. Now, the QQQ made its all-time closing high back in November last year at 403, and now today it's trading at 307.79. So it's trading 24% below that prior all-time high. So we are in bear market territory here with the QQQ. Of course, nicely, it is back up above its 20-day moving average in this week. It's still below the 50 and 200-day. So we know it fell down here to this low at 218, then came back, retested it, back up, and now again back down to these lows. May 20th low here is $280.21. So let's watch this 280 line for the QQQ. It's back up to 307 as we talked about today, but in the coming week, If it has to come back down here and test 280, if it goes below it, we may see another leg down, which of course will take a lot of the big momentum stocks with it. If, however, it can come up, move up, and close above the 50-day moving average and go higher, then it will look more promising. So I'm, again, neutral. I'm going to trade what I see, not what I think will happen, because goodness only knows what will happen in the next week or two. We still have a lot of challenges going on. Our third chart today is a chart of the Invesco Water Resources ETF, the PHO. I chose this because it seems to be a little more calm than the rest of the market, and when we get into markets like this, I've been trading long enough to know it's not the money you make, it's how much you lose. And I don't want to lose any money here. So I'd rather be in a calm environment. And if I leave a little on the table from other more volatile stocks, so be it. I'd rather not lose any money. So I'm looking down here again. We're looking at the Invesco Water Resources ETF, a daily chart, symbol PHO. This is kind of an interesting ETF. It has 38 holdings from a wide range of industry groups, including water utilities, software, chemicals, electronic equipment, and construction and engineering. So they've got a lot going on in this one. Holdings include American Water Works, Roper Technology, Danaher, Ecolab, and Xylem. Now, it made an all-time high back here in January at $61. Then, as you can see, it fell below its 20 and 50-day moving average, fell dramatically here. I mean, did quite a down move, a real dumpster dive, as I call it. It tried to move up again, then fell back down to the February 10th low that everybody talks about, where everything gapped down and most everything closed on the highs, which is a good thing. But no, that was not the low. It came back up, dallied for a little while, then moved back up in March and April to this high up here around 54. This is 54. That's the next resist. Move back down here to the lows in May, down here to 46. So down here it's consolidated throughout May, made a nice little pattern here, and then broke out. And if we take this downtrend line and draw it like that, we can see that at least for this particular down move, the PHO has broken out of it. It's moved over the 20-day, and right now it's hovering just under the 50-day moving average at $50.12, and the moving average itself is at $50.19. So compared to the rest of the market, this is a fairly calm, we can call it trade, if indeed you want to get into it, which is I'm in the mood for calm right now if I'm going to get in. So if in the coming week the PHO can move above this 50-day moving average, which is coming in at 50.19, and if the SPY can remain relatively positive, I may buy a small position of the PHO, and I'm going to place a hard stop with my broker at $46.90. Now, if and when the PHO can, if I can draw a straight line here, if and when the PHO can rise above and close above $54, and by that time the moving, if it moves up like that, the 200-day moving average will be below 54. So if that confuses you, don't worry about it. But if and when it can rise above $54, I will add to my position. And of course, by then, my stop will be a trailing stop. So you may want to keep an eye on the PHO in the coming week. After all, we all have to have water. Now, please know this is the perfect time to invest in yourself. Take a few minutes to check out my online training programs and see how you can become a better trader. These programs include our flagship training, 7 Steps to Successful Trading, that's been so popular through the years. How to swing trade successfully, that's also a good knowledge foundation for right now. How to trade the trend to profits, which is an easier way to learn how to trade, how to trade 3 winning setups, How to read charts is right here, which is great for beginners. And right now, another great one, how to bottom fish like a pro. These programs are timeless, and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen that you can see right here, or even simpler, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.